Okay, thank you again for waiting. We will start with the presentation. Thank you for accepting the invitation, for joining us. The idea of this webinar is to discuss what is happening right now in Colombia, of course, in terms of the fiscal challenges after the tax reform was withdrawn from Congress, and the current social crisis that we are facing as well. The presentation will focus in the first part on the economic activity, inflation, the expectations on monetary policy, and then I will discuss the current situation, as I mentioned. I want to start saying, and I forgot to mention, please ask your questions to the Q&A button in your screen. My presentation will last roughly 45 minutes, and then we will go to a Q&A session. Colombia is currently facing the third wave of COVID. We have observed some decrease in the cases in recent days, but the truth is that it seems that tests are going down, and it can be a result of the demonstrations, because we are having right now logistic problems, distribution problems of vaccines, even medications and food in the country. So it was expected that maybe tests of COVID to slow down in the short term. So in recent days we have seen a decrease in cases. You can see the chart here, and it of course it was expected because of the stringent lockdowns during the last 3-4 weeks. But at the same time, we do believe that maybe the decrease in tests and the logistic problems are resulting in lower cases, reported cases in recent days. Of course, we have to acknowledge as well that the current demonstrations will have an impact on contagions ahead. We are very concerned about that, of course, because several major cities are running right now at a very high capacity of ICUs in the country. So, for example, Bogota has already more than 95% of occupancy of emergency units. So that is a concern, and as long as the demonstration lasts, we will have further pressures on the health system in Colombia ahead. So far, roughly 13% of the population has received at least one dose of the vaccine. According to the President Duque, in May and June, we will observe a very strong acceleration of the vaccination plan. In fact, it is true that in recent weeks we have seen a strong increase in the number of vaccines arriving in the country. For example, in the last 3 weeks, we have received roughly 3 million doses of the Sinopharm vaccine. So far, Colombia has received roughly 11 million doses. And it is consistent with roughly 13% of population receiving the inoculation. According to the president, they want to start the vaccination process of people between 50 and 60 in the upcoming weeks. So Colombia has moderately increased the pace of vaccination in recent weeks. In fact, that said, Colombia remains a lagger in terms of the process, but we are approaching to the average of the global vaccination. But in the region, we continue to have a very slow process, only above Argentina and Peru. Peru continues to be the underperformer in this inoculation process in the region. In terms of economic activity, we are seeing a recovery. I mean, I will focus on what was happening before the demonstrations. According to leading indicators, we had a strong recovery in recent months. In fact, activity has surprised to the upside since the last part of last year. And this is observed here in this chart, in the left-hand chart. Mobility that is very correlated with activity showed a very strong decrease in January amid stringent lockdowns in main cities. But activity didn't fall as strongly as we expected. In fact, I have to mention that in January, at the beginning of the lockdowns, at the beginning of the second wave of coronavirus, the market and even us started to project a contraction as deep as 9% or even 10% in January. But the truth is that in the end, the economy only contracted roughly 4.6% in January. So we think that the economy, and not only in Colombia, but overall in the region, has started to adapt it better to the mobility restrictions. So maybe that is what is reflected in recent figures. But beyond that, beyond the recent performance of the economy, the truth is that the economic activity in Colombia has shown better than expected performance, especially starting in September. And we consider that there are three main reasons for that performance. And these are, the first one is our thesis of domestic diversification. We have mentioned this thesis since even the very beginning of the pandemic. Recall that Bogota, Cali, Barranquilla, and Medellin, the main four cities of the country, represent only 40% of GDP. And I say only because when you see what Lima represents for the Peruvian GDP, or Santiago represents for the Chilean GDP, we are talking about something more than 40%, only the capital. We are talking about four cities, only 40% of GDP. So we think that diversification in Colombia plays an important role and makes the economy resilient to some extent. Because we believe that several regions in the country try to act like a counterbalance to other regions that face very negative performance, especially during the pandemic. The major cities, particularly Bogota, Cali, and Medellin, are the cities that have suffered the most with the pandemic. So we think that this diversification, the large number of mid-size cities, play a role in the resilience of the Colombian economy. And this is a thesis that we have since several years ago, and that in our view is the main explanation for a good resilience to external shocks in Colombia. The second factor, of course, very debatable, I would say, but it's important to mention, informality plays a role as well, because in Colombia, recall that we have an informality of roughly 50% before the pandemic. We estimate that informality in the labor market approaches to 60% roughly at this time. But the truth is that informality allows that people can move more freely in the market, and especially during quarantines or during lockdowns. So we know that the formal workers cannot find a job very quickly if they are fired. In the case of informal workers, when the lockdown ends, the informal worker can go to the street and try to create or earn income again. So we think that the informality, while it's a very negative factor structurally for an economy, we think that has played a favorable role during this pandemic because the market is more flexible than in other countries. I always think about Chile because Chile is very inflexible and very formal, different to Colombia or even Peru. Of course, long term, again, the informality is not a good news for potential growth. And the third reason is mobility and adaptability to the mobility restrictions, and we are seeing that in most countries in the region or around the world. The impact of the first wave or second wave on activity and productivity has not been the same that we have observed in recent months. So you can see, of course, mobility improved in March, part of April, but since last months, we started to see a decrease, especially because lockdowns were more stringent starting the month. And of course, we expect an impact in the short term. Now, Colombia continues to be a relatively open economy in the region. It's interesting. We continue to have these lockdowns, very stringent restrictions. But the truth is that when you compare the situation of Colombia with other countries, Colombia remain, I mean, close to the average, especially when compared with Chile, Peru, and we expect ahead to observe an improvement in mobility. Of course, the demonstrations, I don't know what will happen in this case, but mobility will materially increase in the next readings of these mobility reports. But the truth is that we continue to be very, very far away of the worst time of the COVID that was in April last year. So we are very close to what happened in August last year, when stringent lockdowns were in place as well, especially in main cities. But again, I think that we will start to see an improvement ahead. In fact, even despite what is happening in Colombia, yesterday, for example, the mayor of Bogota set lower restrictions for the upcoming days in Bogota. So I think that there is no other option in Colombia and in several countries that allow the economy to start to improve, because we already have in Colombia almost 1.5 months with very strong restrictions, and of course with an impact in the economy. We are considering, of course, this in our projections. We will have an April and May that are slower in terms of activity. Now, I want to highlight and to recall, maybe you have heard from us this comment, and maybe in our reports as well. I want to highlight Colombia. I mean, the resilience of Colombia, in my view, is very valuable because Colombia implemented a very low fiscal package to face the pandemic. You know, Colombia had the second lowest fiscal package after Mexico in the region last year. And at the same time, fortunately, in the long term, this Congress in Colombia has not approved populist measures like the pension funds withdrawals. So to see Colombia growing in a relatively healthy pace, of course, before these riots, is a very positive news, because the growth in Colombia is not supported by very strong fiscal spending or the support of private savings, you know, like the case of pension savings. So Colombia, again, that demonstrates in our view that Colombia has some kind of higher resilience than other countries when we face external shocks. Another thing that we have to highlight that is happening in several countries around the world, I would say, even developed countries and countries in the region as well, is that the private saving rate has increased materially. Unfortunately, we don't have like official figures of private saving rates in Colombia, but you can see the trend in Chile, in Peru, in the US, in Europe, in the UK. And of course, the same is happening here in Colombia. You can see that, for example, private consumption, the overall indicator of private consumption is increasing materially until March, at least. This is car sales, and this chart here, the right-hand chart, is house or home sales. And right now, until April, we are seeing we are seeing record high levels of housing sales in Colombia. And we are seeing a very strong recovery of big ticket items in Colombia. I would say this is exactly the contrary that an economist would expect after a recession, right? We would expect that the construction sector of the auto sales to lag behind in the recovery. That is exactly the opposite that we are seeing right now in Colombia, in other countries as well in the region. The truth is that we do believe that we are having a higher saving rate, especially because the people that didn't lose their job last year saved a lot, and we all know that when you make the math of what we saved last year, with not traveling, no buying a lot of things that we used to buy in a normal year. Overall, formal workers, and again, people didn't lose the jobs, managed to save a relevant portion of money. And in fact, yesterday I had the opportunity to talk to a construction company that is doing very well. And they confirm this. They are seeing a very strong saving from some segments of the population. And of course, lower interest rates are helping to the trend in auto sales and homes. But we are seeing like a higher disposable income in the economy, and that is good news, I would say. Of course, on top of that, recall that the government in Colombia, although relatively small stimulus, the government is making transfers to vulnerable population, and at the same time, we are receiving grace periods from banks. We are receiving some I would say grace periods as well in terms of public services, utilities, rents, especially for the low income and middle income population. So all that mean a higher saving rate. Again, is not all in Colombia; it's happening in most countries in the world, and that is meaning higher than expected performance of a consumption in the country, at least until April. You know, that is the most recent information that we have. In fact, other leading indicators like cement dispatches or energy demand, these are levels. These levels of these leading indicators are suggesting that we are very close to pre-pandemic levels, at least in these indicators. And the truth is that I would say the government has been relatively successful at maintaining the construction sector open during all the pandemic. We are seeing this good performance that I mentioned before in terms of housing, but at the same time, infrastructure projects have continued to advance in recent months. And this is reflected in the good performance of cement dispatches. And energy demand, of course, is an overall indicator of the economy that is showing as well better performance in recent months. Again, of course, in May, we expect a decrease and a slowdown of the economy. Before the riots, before the demonstrations, the performance of business confidence and consumer confidence was very positive. The recovery has been strong so far, but we already are having some information that confidence will collapse in in May, of course, because the current situation, there is a lot of uncertainty, not only, of course, around the pandemic, but in terms of the socio-political crisis that we are facing in Colombia at this time. But 3 weeks ago, consumer confidence, business confidence, we were reflecting that the economic activity would continue to recover ahead. Of course, we have to wait for the impact of the current situation, but at the same time, it is expected that if the government is able to solve the current situation relatively quickly, of course, we can resume the economic growth in the very short term, in the upcoming weeks or months. Right now, we continue to have a projection of growth of 4.8% for this year. But the truth is that after the better than expected performance of activity in the first quarter this year, we are seeing an upside bias on our projection. In fact, our models are suggesting that the economy can grow at least 5.5% this year. That would be very positive, of course, even thinking about fiscal accounts. Of course, we can have a surprise, a positive surprise on fiscal revenues during the remainder of the year if the positive bias materializes. This next Friday, we will have the release of the national accounts figure for the first quarter, and we are expecting that the economy grew roughly 0.5% in the first quarter. If that materializes, we can increase economic growth. But of course, we have to acknowledge that we are concerned about the current situation, and maybe we can have at least a short-term impact on activity that can affect as well expectations for the remainder of the year. Until here, and before talking about the riots and demonstrations and the socio-political crisis, I would say until here, I presented some or several positive factors that have allowed the Colombian economy to continue to recover in recent months. But beyond that, of course, for the medium term, for the upcoming quarters, we continue to see several challenges for the economy, and not only because of the current socio-political crisis. No, it's something that we have mentioned in our reports in recent months, and not only apply to Colombia, applies for the whole region. We are concerned about the labor market, and we are concerned about investment. Of course, the two variables are linked. We are seeing a strong deterioration of the labor market in the whole region, but of course in Colombia is maybe more critical, considering that Colombia was informal, very informal before the pandemic, and after the pandemic we are seeing further deterioration in the labor market, especially because we are seeing a very strong recovery, as I mentioned before, in informal jobs, but formal jobs, salaried jobs, remain relatively sluggish in terms of the speed of recovery. So we are seeing an additional worsening of the labor market in Colombia, and of course that will mean lower income, and of course that in turn can mean a lower consumption ahead. So we have to monitor very, very closely what the developments around the labor market. At this time, 1.3 million jobs are yet to be recovered from the pre-pandemic levels. So it's a huge number that we have to recover ahead. And of course, the current situation is not helping for that purpose. In terms of private investment, we have seen some stabilization, but you can see here the capital goods imports as a proxy of investment, that the investment is not recovering. I mean, of course, we will see ahead some rebound, but because of the statistical base of the last year. But we continue to see a very sluggish private investment. And I would say that several factors are playing here. Of course, the uncertainty on the pandemic behavior ahead is the main factor, I would say. But at the same time, we knew before the demonstrations that this year was a year of a tax reform. And at the same time, 2021 is a pre-electoral year. So the outlook or the backdrop for private investment wouldn't be the best this year. And 3 years ago, before the elections, presidential elections of 2018, we observed a very strong slowdown of investment until having more clarity. And of course, at this time, with the current situation, it's very complex to think that private investment will recover, especially considering, as I will mention later, that the new potential tax bill will focus on corporates, So the first bill focused on individuals, now on corporates. And so corporates will maybe postpone or at least are likely to cut some investment projects. And we have elections in 1 year. So again, the backdrop is tough for private investment. Maybe private investment, what is related to oil and mining, can lead investment. Private investment, in fact, is the projection of the central bank. We can see with the current oil prices a rebound of oil related investment, but the truth is that the rest of the investment will remain relatively sluggish until having more clarity. And of course, if we don't have a strong rebound in investment, it's very unlikely to see a strong additional recovery of employment. So these are maybe in economic terms, beyond the current situation, maybe the main challenges that we are having in Colombia at this time. In terms of inflation, I would say what is happening in inflation in recent months in Colombia is very similar to what we are seeing in most of the countries around the world. A strong rebound in some prices, but temporary because of temporary factors. The statistical base of a year ago, and some reversion effects, and the recent increase in inputs around the world of commodity prices. You can see here, in fact, when you see the categories of inflation in Colombia, you see this material increase in regulated prices. Last year, the government frozen several tariffs, especially for vulnerable people, utilities. The government froze rents for vulnerable people as well. And even some taxes were cut temporarily, for example, for communication and other important items. So we're seeing the rebound. Of course, gasoline prices are playing a role as well. But you can see the rest of components. Non-tradable. Non-tradable is at a record low level. Non-tradable is the component more related to domestic demand, and it remains close to zero. And you have tradable. Of course, we have seen a recent increase, but it's not material yet. Maybe part explained by the FX depreciation, but also because the strong demand that we have seen recently, as I mentioned before, in goods especially. But we are very far from the levels observed in previous years. Now, these three measures in the right-hand chart are the core gauges that the central bank monitors. And you can see that all of them are below 2%. And recall that in Colombia, the target range is between 2 and 4. So we continue, beyond the recent upside surprises on inflation, we remain at historical low levels of inflation. Right now, inflation is at 1.9%. That continues to be a record low, or very close to record low levels. So this is a positive news, I would say, because contrary to other countries, as I mentioned here, contrary to other countries, we are starting in a very, very low level of inflation. So of course, maybe we will have a jump in inflation in the upcoming months because this is statistical effect and the reversion of temporary factors. But even despite the maybe a strong increase that we can observe ahead in the upcoming months on inflation, it's very unlikely to have inflation higher than 4%. I mean, the ceiling of the target range. We don't expect that. In fact, as I mentioned here, all these temporary factors are likely to push inflation to 3.5%, around that level in the upcoming months, because of, again, these temporary factors. But ahead, we continue to see an inflation very controlled, an inflation in check. We are estimating an inflation around 3.3% this year, and 3.3% as well, or 3.2% in 2022. And the central bank remains relatively comfortable. Of course, we all are, including the recent surprises, what is happening in inputs, in imports, the higher costs that are facing companies, or companies are facing, sorry. But the truth is that the whole inflationary pressures so far are temporary in nature. So we expect that with a various wide slack capacity in the economy, with the situation of the labor market, we continue to have very moderate pressures on inflation ahead, beyond these temporary factors that I mentioned here: education, gasoline taxes, that will increase some components of inflation. With this, we continue to expect a very negative output gap this year, despite we will observe a rebound in the economy. But it's important to highlight that the output gap will remain very negative. And in fact, this year, with the recovery of the economy, the output gap will be more negative than the worst moment of the global financial crisis of 2008, 2009. So the slack capacity remains considerable. The central bank remains relatively comfortable. In fact, recall that in the last policy meeting, one of the new members of the board voted for a new cut of the interest rate. So the discussion is very open, but I would say that the central bank is very comfortable with the current stance, because the slack capacity in the economy remains huge, and very important, the central bank, in the last inflation report that was released last week, the central bank stressed in several parts of the reform that the most important measure of inflation is the core inflation, inflation excluding food and regulated items. And the central bank is expecting that core inflation will stand around 2.2% at the end of this year. So everything will depend on inflation expectations. And of course, we have to acknowledge that inflation expectations in our countries, and including Colombia, are very volatile. And we can see an increase in the upcoming months on the hand of the increase in observed inflation. And the central bank will have to determine what to do. But the truth is that if medium and long-term inflation continue to be under control, we don't see any movement by the central bank. Now, currently, the market is expecting a first move in the fourth quarter this year. We continue to see the first move of the central bank in the first quarter next year. So, I mean, the difference in terms of time is very small. The market is expecting something between, even in December, and we're expecting something around January. I mean, the difference is not material in terms of when we are seeing the first rate hike by the central bank. Now, very importantly, Mr. Villar has repeatedly mentioned in recent weeks that the approval of a tax reform is key for the central bank to maintain an expansionary stance. I mean, in theory, we can think that if no reform is approved at all, in Congress, we can see further strong depreciation of the Colombian peso. We can see sell-off in the markets and outflows from Colombia. And in the end, that can push the central bank to increase rates in order to deter the outflows, but at the same time to ensure inflation expectations. Because the increase in the FX can prove to be inflationary in the medium term. So Mr. Villar, I would say, is trying to mention that to increase rates is very likely in the case that a tax reform is not approved in Colombia, and that is in line with we are mentioned in the last year. We think that the reaction function of the central bank in Colombia consists of three components: the two of always, inflation and GDP growth, but on the other hand, the tax reform, at least in 2021. Because if the government is able to approve a reform, we are saying that the fiscal policy will be restrictive in 2022. So I would expect that the central bank, and under that scenario, to remain expansionary in order to be a counterbalance for the fiscal policy. So what Mr. Villar has mentioned is consistent with that. If the tax reform is not approved at all in Congress this year, the central bank can be forced to increase rates sooner than expected. But so far, we continue to see the central bank on hold during the remainder of the year, with the first rate hike in the first quarter 2022. Of course, acknowledging that there are some risks to sooner movement from the central bank. Now, I will start to talk about the current situation. We have granted a likelihood of roughly 70% of likelihood to the scenario of losing the investment grade status in Colombia. We have granted that number since July last year. This is not new. We have played on the conservative side since last year, because we knew that approving a tax reform during the pandemic and during a pre-electoral year would be a very tough task for the government. Of course, I never thought that the situation would be so critical as is now on the streets. But we knew that that was a very titanic task for the government. Now, that said, we have always believed that a tax reform will be approved in the end, and we continue to see that. I mean, we do expect a tax reform in the end. But the question is the quality of the reform. Our concern has never been the tax reform and the targeted tax collection from the reform. Our main concern has been the quality of the reform. Why is that? Because especially Fitch has been very vocal, very critical of the government during the last 2 years, mentioning that the Colombian government, Colombia, requires a structural reform, requires higher permanent fiscal revenues, and that the number is not the only thing that they are monitoring, the number of the tax collection expected with the reform. So we have always been concerned about the quality of the reform, and the original bill was seeking to like respond to that request from the rating agencies. The initial bill that was withdrawn from the Congress was structural in nature, indeed, in our view. Okay, but of course, the timing was not the best for the reform, and now we are talking about these potential measures that will be included in the bill that the government is building with guilds, with other political parties, and even the society in general. These proposals are like a consensus right now in the country, but most of them are temporary in nature. Okay, so the most important one is a temporary surcharge on the corporate income tax. Currently, the corporates in Colombia pays a tax of 31%, and we don't know what will be the magnitude of the surcharge. But even some political parties are proposing even 10% of higher of a surcharge. So maybe we can converge to 40%. That is not new for Colombia. That is the truth, unfortunately. But only in 2014, 2015, the corporate tax rate was 40%. The last tax reform of the Juan Manuel Santos government and the first reform of Ivan Duque decreased materially the effective tax rates for corporates. So what the consensus seems to be right now is to go back 6 years ago in terms of the taxes for corporates. Of course, it seems to be temporary, but we don't know. In Colombia, what is temporary used to end up being permanent, you know. So we would know, but that is the main, I would say, the main proposal that we are seeing on these days. The second one is the suspension or even the elimination of a discount for firms from the municipal tax that we have in Colombia. The municipal tax is a tax that is charged on revenues on corporates in the cities, and in the most recent tax reform, it was set that 50% of the municipal tax paid would be discounted from the income tax for corporates. That represents roughly 0.5% of GDP in lower fiscal revenues. So it seems to be a key proposal as well of the new bill, because only to suspend that or to cancel that discount will represent a half or 0.5% of GDP in terms of fiscal revenues for 2022. There are all other proposals like an increase in the income tax rate for high-income individuals, the reduction of deductions and exemptions for individuals as well. And there is a consensus, in fact, that was included in the original bill to increase the tax on dividends from 10 to 15. But it's important to mention that the original bill set this increase only for residents, not for foreigners. So we have to expect what the final proposal will be in terms of the tax on dividends. A temporary wealth tax on high-income individuals and reduction of public expenditures. The truth is that we know that in Colombia it's impossible to expect a very strong decrease in public expenditures because the budget is very rigid. So maybe the government will make some effort, but that is not the main or the core of the higher revenues or the fiscal adjustment rather ahead in Colombia. So with these proposals, the new Minister of Finance, Jose Manuel Restrepo, is talking about a gross tax collection of 1.4% of GDP. And I say a gross tax collection because remember that the other leg of the tax bill is to maintain social programs, and in fact to expand some of those programs. So if we try to assess the net tax collection, we think that that will be something around these levels, between 0.7 and 1% of GDP. If you ask me, and maybe you know also this, maybe there is like a consensus in the market that if the tax collection is close to 1% or in this range, maybe Colombia can preserve the investment grade status. That is like a consensus again. Of course, we're not sure of that, and the discussion will be tough in Congress. If we are below this range, I would say that at least Fitch will make a downgrade on the Colombian sovereign. Now, as I mentioned before, the big question is the quality of the reform. And this reform is not good. I mean, it's a temporary reform. It's a reform that means that in maybe 2 years, again, as has been the case in the last 20 years, 30 years, we will have to discuss another tax reform and maybe a structural tax reform. You know, in Colombia, we have like 20 years talking about the need of a structural tax reform and has never come. And again, that will happen. So the big question is if, especially Fitch, that has been so vocal in terms of this quality of the reform, if Fitch will carry out the downgrade anyway, even despite the tax reform tried to collect 0.7, 0.8, 0.9% of GDP. So that is the big question. If you ask me, my personal opinion, if Fitch wants to be consistent with what they have mentioned during 2-3 years, they would execute the downgrade anyway, because these measures are not structural, are completely temporary. At least 50%, 60%, 70% of the reform will consist of temporary measures. So that is a close call for Fitch especially. We understand that Standard & Poor's is like more moderate. Maybe they can give more time. In fact, Standard & Poor's a couple of weeks ago maintained the BBB minus with a negative outlook, and they say that can wait maybe to until year end to make a final decision, etc. So we do believe that the pressure will come from Fitch. Now, Jose Manuel Restrepo, the minister, has mentioned that he will talk with all the agencies, of course, trying to beg not to do the move in the upcoming months. We don't know. Richard Francis is very has criticized Colombia a lot in recent years. So I don't know if he will want to see more things in the upcoming years. And I don't know. And you know that we have elections, so it's not an easy decision for rating agencies because if this government commits to a further adjustment ahead, that won't depend on current government. That will depend on the next government. So it's a close call. It's very difficult, but my sense, or at least my thought, is that Fitch is the rating agency that can, in the end, lower the rating for Colombia. But I think that Standard & Poor's can wait more. Moody's is not a concern, at least in the short term, because these guys continue to have a BBB rating. So they have to make 2 moves in order to lose the investment grade status. So the threat is Fitch, in my view, at least in the short term. Of course, if Colombia doesn't approve a reform at all no type of, no reform in any shape, of course, we would expect a downgrade, and even the situation would be worse ahead. This complements what I mentioned in the previous page. According to our estimates, the total adjustment that Colombia requires in the upcoming years is 2.5% of GDP. It's a very huge number. In fact, recall that the former minister Carrasquilla mentioned in June last year that Colombia required, starting in 2022, an adjustment of 2% of GDP. We are estimating that we need a adjustment of 2.5% of GDP to stabilize that in 2023. Of course, it's not easy, and this means again that we will need another tax reform in the upcoming years. Of course, we are buying time. The government will try to buy time with the reform that they are building. Now, important to mention, 1% of GDP is expected to come from lower evasion and avoidance. The truth is that the government has done a good job in terms of make the tax entity more efficient, and the results have been very positive in recent years. They are increasing materially the tax collection of evasion and avoidance. So maybe it's likely, but it's something that is difficult to quantify, and we don't know the final result. Of course, if Colombia doesn't make tax reform, we will have an explosion of the debt ahead. Again, my estimate is 2.5% of GDP of required adjustment to stabilize debt ahead. So of course, a tax reform of 1% of GDP is not enough, and we are buying time, but debt will continue to go up ahead, and the government already knows that as well. Very important factor to mention as well. Two things before I forgot. First, we asked José Manuel Restrepo about the possibility of the elimination of the withholding tax for foreigners in the local debt market, and he didn't answer. Of course, that proposal was included in the original tax bill, but at this time they are no, the government or the minister are not saying anything about the bill. They only say that they will try to build a tax bill with all the agents involved, the Congress, guilds, and even the community in general. I don't rule out that in the end that article will be included. In previous reforms, the article to decrease the withholding tax for foreigners has been included in the last part of the debate. The Congress usually doesn't focus on that, so I don't see. I see that the likelihood is relatively high that in the end we will see that article in the reform. But again, they have not been any official announcement from the government around the reform. Everything what I have mentioned here is the consensus, what is being talking in media, and some information that we have received, but we don't have any official information yet around the new reform. And the second thing to mention is that we recall that the bill, the original bill, included a change in the fiscal rule, and the new fiscal rule will have a threshold of debt, an anchor for debt, and we will have a more transparent way to calculate debt and the primary deficits. The truth is that the current fiscal rule have lost credibility, transparency, and is difficult to estimate. So the government is proposing to make the fiscal rule more transparent, and at the same time to include this threshold of debt that is very, very important, especially for rating agencies. So that would be positive if in the end the fiscal rule is included. We asked the minister if in the end the proposal will be included in the bill, and the initial answer is yes. The idea is to propose the same changes to the fiscal rule that the original bill included in the new tax reform. Now, very important to highlight as well that the new proposed fiscal rule provides more flexibility to the government. This is the chart that shows that. Why is that? Because remember that the current fiscal rule only applies on the central government. And the proposal is to widen the scope of the fiscal rule to the general government. So when you change the scope of the rule, the government overall will have more space to spend. Why is that? Because usually the source of fiscal deficits and higher debt is the executive, is the central government. Usually the decentralized entities of the government usually have surpluses, So in the end, when you cross all the figures among all the levels of government, in the end, the government can have more flexibility to make the adjustment ahead. So that can prove to be positive as well in the current situation. In fact, in that sense, Fitch and Standard & Poor's have made comments, favorable comments about the new proposal. So we have to wait, but it is likely that we will have a new fiscal rule that is said to be more credible and more transparent, and that is something that Colombia has to do in order to improve or strengthen the institutionality ahead. We recently released a report about the potential impact of the losing of the investment grade status in Colombia. We released this report 10 days ago, and the report, our analysis was focused on determine how many or how much of the current positions of foreigners in Colombia have to leave the country in the case that Colombia loses the investment grade status. So we focus on forced sales from foreigners. How did we do that? We enter fund by fund that have exposure to Colombia and analyze their investment regime, the fact sheets of the funds. So we concluded that 88% of the funds, foreign funds that have exposure to Colombia, don't have any restriction to maintain high yield bonds in their portfolios. So we are talking about that 12% can leave the country because it's mandatory from the investment regimes of the funds. But on the other hand, we have to acknowledge as well that 12% have like a combined restrictions are not clear. So for example, you can have high yield bonds, but only the 40% of your portfolio, so it are mixed or additional restrictions that we cannot monitor in the end. So we observed that. And on the other hand, we analyzed for passive funds, how many of them follow the GBI, Diversify, and the other main indexes. Most of them are following benchmarks that don't have any restriction to maintain high yield bonds either. So in the end, we estimate that the potential impact coming from forced sales from foreigners is relatively moderate. We estimate a range between 1.4 and 2.6 billion dollars. So the worst case would be 2.6 billion dollars. Now, of course, this is only assuming forced sales, you know. So I have to clarify that, because of course, if Colombia loses the investment grade status because we don't have any tax reform at all, and the market starts to price in the possibility of Colombia not only going to double B plus, but double B or double B minus, of course, the situation is other different, you know. So maybe we will have a further sell-off, a stronger sell-off and more outflows. But assuming that Colombia loses the investment grade status, but because the tax reform was not enough for rating agencies, but some kind of credibility or commitment continues to be present by the government and authorities, we think that the potential outflows can be capped in $2.6, $3 billion. I have to mention that, I'm sorry because of the propaganda, but we released this on Thursday 2 weeks ago, and then a couple of global investment banks released similar reports, and the outcome of those reports is very similar to this. Okay, so the maximum potential impact that is estimated is something close to $3 billion. Of course, we can have more volatility or even active investors leaving the country. We don't know, but we are assuming some of these kind of outflows in the case Colombia loses the investment grade status. Now, as I mentioned before, the downgrade is a close call at this time. We think that Fitch is the main threat for the rating. But on the other hand, there is another factor that is, I mean, it's complex to determine, to assess. If Colombia loses the investment grade status by Fitch, and Standard & Poor's takes more time, and maybe, I don't know, the tax reform makes it comfortable, and they want to expect, I don't know, elections, that is the other discussion that they can expect until election next year, etc., etc. In the end, we continue to have a Colombia that is on average investment grade, you know, because if Fitch loses, downgrades Colombia, that will be double B plus, but if Standard & Poor's will remain triple B minus, and on the other hand, Moody's remains triple B. So we have three different notches in the country. So the final effect on funds is not straightforward. And on the other hand, and this is difficult to observe as well, because we cannot enter in the details of every fund, but Colombia can lose the investment grade status for the foreign currency bonds, but Colombia can continue to be an investment grade country for local bonds. So it's a strong discussion, you know. But we are working with these figures. The impact would be, not negligible, but won't destroy the market. And we have to wait. Now, the other exercise that we made was to try to determine the implicit rating that the market is trading at this time. What rating is implicit in the market? And our estimates suggest that the market is already pricing in double B plus or even double B, depending on the models that we run. But we run several models, and you can see that all of them are below investment grade status. And this was before the riots. I want to highlight that. Okay, we made this analysis 2 weeks ago. So with the recent performance of the local debt market, is obvious that the market is even, is going deeper into the high yield sample. But of course, again, everything will depend, in our view, on the way that Colombia loses the investment grade status. It's not the same losing the investment grade status with a tax reform that losing it with no reform at all. So we have to take into account that as well. And finally, sorry, I spent more time than I wanted, but it's a lot of topics that we want to highlight. Before I end, I recall you that you can ask questions through the Q&A button in your platform, and I will, after this slide, I will go to those questions, and we have the Q&A session. It's impossible not to talk about elections, and the political situation. You can see that Mr. Gustavo Petro is leading the polls at this time. Of course, we had a very strong increase during the last months in favor of Gustavo Petro. And I think that the timing of this poll was the worst, because this latest poll was implemented after the tax reform crisis, So I want to tell you that I have talked to some political analysts, and they say that this vote can be reflecting the anti-establishment vote, but not a strong support of Petro per se. Of course, it's very difficult to assess that, but we are very far away from elections. You can see, Peru. We are 3 weeks before elections, and we don't know who will be the president. And even they that reached the second round, Keiko and Pedro Castillo, were not the most likely candidates to achieve the second round. I mean, that was a complete surprise. And in Chile, we have noise, and I don't know. It's a regional topic, I would say, what we are seeing right now in terms of politics in Colombia. Now, then political consultants told me, please go to May 17, 1 year before the election of 2018, and take a look on the polls. This is the same poll, but 4 years ago. And we had in the first place, Mr. Germán Vargas Lleras, and in the second place, Gustavo Petro. So Gustavo Petro has remained as a competitive candidate during several years. Of course, Petro is the main risk for Colombia. And remember that he reached the second round against Duque in 2018. But very importantly, you can search for Duque here. You can find it. Duque was not a candidate 1 year ago. Duque, in some other polls, showed us a vote intention below 1%. Okay, so it's too early to say. It's too early to say. Of course, the likelihood of Petro gaining strength and being a more competitive candidate is higher, of course, under this scenario. But at the same time, the experience, the history taught us that 1 year is a lot of time for elections. Now Vargas Lleras reached the 4th place in the first round with only 7%. I mean, a lot of things can happen in 1 year. And very important, when you see this poll, there is no a right-wing candidate. I mean, the only candidate that appears here is Marta Lucía Ramírez, right-wing candidate. Marta Lucía Ramírez is the current vice president, but she doesn't have option, in my view. She doesn't have option at all, But as we don't have official candidates yet, the poll is not asking for anyone. So you only see like center left, center, and leftist candidates in the polls. So again, too early to say. We don't have any or even a right-wing candidate. What political consultants mention as well is that Colombia continues to be a right country. And that according to several studies, not only polls, but some more specialized analysis, what is materially increasing in Colombia is the center. According to them, to these experts, the left and the support to the right as well are materially decreasing, and the center is gaining traction. Okay? In fact, very importantly, you can see here the strong increase of Petro, the lower support for Sergio Fajardo. Sergio Fajardo is a centrist that was third in the first round in 2018, and he only was 60,000 votes below the threshold to go to the second round. I mean, he was very, very close to become president of this country, Mr. Sergio Fajardo. This poll of April asks about potential second round scenarios, and you can see this. In fact, Sergio Fajardo is not far away from Gustavo Petro right now when you ask for those two candidates only. And in fact, 23% will be undecided in this scenario. So I would say, again, maybe my view, but I share with you what several political experts say, is that the center is the spectrum that maybe has more likelihood to gain the presidency or to win the presidency in 2022. Of course, the risk is to have a scenario like the Peruvian one, you know, the far left and the far right, and we can see a lot of noise. That is the risk. But in my view, in my personal view, I think that the center with a good candidate, I don't know if Sergio Fajardo can be the person, but we are seeing some alliances are starting to be created, are in the media, you know, with a good center candidate, maybe we can have a centrist presidency in 2022. My sense in Colombia, like can happen in Peru or Chile or other countries in the world, is that people don't want extremism. We need someone that depolarizes the country, you know. Petro is not that person, and maybe the right-wing candidate, the far-right candidate, won't be that person either. So the center knows that has a real chance to win the presidency, but of course they have to focus on the candidate. At this time, I mean, the campaign has not started yet, and we think that will be the case maybe after September, October, or something like that. Mr. Duque was elected as a candidate in December 2017, so only 5 months before the election. So that is important to mention. Traditional political parties chooses their candidates very close to the election. Now, finally, to end this topic, we are seeing a more calm situation in Colombia during these days. Fortunately, we have already like 5 days with no violent demonstrations in the country. Of course, there is a city that continues to have a very complex situation, that is Cali. Cali is the second highest or largest city in Colombia that is close to the Pacific coast. Unfortunately, Cali is the closest city to the drug dealers' roots, you know. So in that region of Colombia, we have the guerrilla, we have self-defense groups, we have criminal bands, and overall what is related to drug trafficking. So Cali is in the middle of our ever-present problem of trafficking drugs or drug trafficking. So it's a shame what is happening in Cali, but the president is today there, and they are making the decisions. The problem as well is that Cali is close to the main port in Colombia, in the Pacific, so we have distribution problems for food, for medicines, even oxygen for the COVID cases. I mean, it's crazy, the situation. But again, during the last days, we have seen material improvement. The turnout of demonstrations has materially decreased in recent days. And we expect the president to start to achieve some agreements with the leaders of the strike. The truth is that they met for the first time yesterday. There was no agreement at all. So the leaders of the strike called for a new demonstration tomorrow, Wednesday. We have to wait how that will occur or develop tomorrow. But the president is already forming a cabinet, a group to negotiate directly with these guys. I have to say that, of course, it's unfortunate what we are facing in Colombia, but maybe we expected this situation since last year. Because if you remember, maybe remember, after the social crisis exploded in Chile in October 2019, something similar tried to happen here in Colombia in November 2019. In fact, in Bogota, we have our first curfew in 30 years in November 2019, because the social crisis wanted to come to Colombia as well. And in the first quarter last year, demonstrations continued and the national strike continued. But the pandemic, of course, stopped and interrupted the national strike. So we all knew, maybe the only that never saw this happen again was the government. That is the truth. The government thought that maybe demonstrations never came back. But the truth is that everyone in the country knew that the leaders of the strike were expecting for the perfect timing, the perfect excuse to resume the demonstrations. So, of course, we have legitimate demonstrations, legitimate demands, but at the same time, we are seeing a very strong violence in Colombia. And organized groups are behind this. Is not a lie, is demonstrated already. In fact, the intelligence in Colombia has demonstrated that some guerrilla groups and narco groups are behind the violence. They want to destabilize the country. And of course, this is perfect before elections, you know. Now, on the extreme, this is important to mention. On the other hand, even Mr. Gustavo Petro is increasingly concerned about the situation, you know, because he started to push and to promote and to back the demonstrations. But when the intelligence started to show that the guerrilla was behind the violence acts, Petro started to be concerned because he's a former guerrilla group member. He was part of the M19 group. So if the guerrilla starts to gain traction even in main cities, that is not a good thing for Mr. Gustavo Petro either. So even Mr. Gustavo Petro, that backed the demonstrations and the protests, started to say recently that the strike has to end, that the main goal was achieved, that was to withdraw the tax reform from Congress. You know, so even Mr. Gustavo Petro is increasingly concerned about the current situation. So we expect this to gradually calm down. We have to acknowledge that this time is different to last year because we have the pandemic and we have elections in 1 year. So maybe this will fade, but more slowly than last year. But we are confident that maybe the worst is behind us. The president is meeting with all political parties, even the opposition, even they are planning a meeting with Mr. Gustavo Petro. They are, again, starting to negotiate with the leaders of the strike. So we do expect this to start to fade ahead. And as I mentioned before, we do expect a tax reform being approved in the end. Of course, always there is a scenario always of no reform at all and more problems. But I do believe that even the congressmen require the reform because again the reform seeks to expand social programs, and that should be even positive for some politicians in the country. So I do believe that a reform will be approved in the end, but we have to wait. I think that the market has reacted positively in recent days, especially the stock market and the FX market. The test market has been more volatile. But the truth is, I think that the market is trying to price in a tax reform in the end, a more, I would say, more moderate speech from the new minister. There is a more consensus about a tax reform, a particular tax reform. And on the other hand, I would say that the market is already reacting to a lower turnout in recent demonstrations and lower violence in the last 4 days. Okay, sorry, I'm really sorry. It's the first time. A lot of time ago, I didn't do a presentation. So I spent more time than I wanted in the presentation, but we have some minutes, so I'm glad to answer any question if you have. You can ask the questions in the Q&A button in your screen. So far, I don't see any question, no one has written any question, nor in the Q&A button or the chat, but I will wait for a couple of minutes. Thank you. Is there a deadline for the approval of the reform? No, there is no deadline. In fact, the government wanted to approve the reform before the end of the current legislature. The current period of the Congress ends in June, by mid-June, but it's unlikely. We need 3 debates for the approval. I mean, 1 in economic commissions and 2 in each in Senate and the lower chamber. And the new minister has mentioned that they want to take advantage as much as possible of the current legislature. So that means that they are preparing to start the debates maybe in this legislature, but to continue or to finish the discussion in the second period. But the second period starts on July 20th. So it's a vacation of 1 month. I would say that the best case would be a reform being approved around August is my best case at this time. But there is no a deadline per se. The government wanted to approve the reform in June in order to avoid like the combination of the presidential campaign with the discussion of the reform. But after this mess, I think the deadline is not necessary anymore, and they can approve the reform around August with no problem at all. In the end, the rating agencies have mentioned that they will wait for the final outcome in order to make a pronunciation. What will take for BANREP to incorporate financial stability to its reaction function? To what extent is steeper USD curve can force BANREP to hike despite low inflation? Good question, Iker. I would say, even I was discussing this last week with some colleagues here in Colombia. We cannot rule out that the central bank, in an extreme case, can intervene in the market through purchases of tests. In fact, last week, I mean, in the market, not with the central bank, but in the market, that was a discussion. What if yields continue to go up because of the potential downgrade of the rating in Colombia? And we in the end concluded that it's a possibility, of course, that if the central bank starts to see that the higher yields have not only a negative effect on financial stability, but also on the transmission of monetary policy, they can act. They can act. They have the ability. Recall that in Colombia, the central bank can buy local debt, public debt, directly in the secondary market, as they did in the worst moment of the pandemic last year. So we cannot rule out that. But on the other hand, my sense, and this is what I have mentioned to some clients, is that maybe the central bank cannot act when the move of the yields is because of fundamental factors. You know, I mean, if in the end we have higher yields because of the strong reduction in the credibility of the country in terms of the public finances, I think that the central bank will try to avoid an unnecessary volatility, but they won't try to change the trend. That is my sense, you know, and that is aligned with what the governor Villar has mentioned, that in the end we should have higher rates if Colombia is not able to approve a tax reform. So I don't rule out an intervention, but I think that this time is different when compared to, for example, the pandemic crisis when it started. So I don't rule out that, but in the very short term, I don't see that happening. And the central bank will want to wait for more information and the final result of tax reform as well. But again, of course, if they see some impact on financial stability, they maybe will act, but maybe not at the same extent of what we see the last year. In terms of the increase in US in treasury rates, the truth is that, I mean, the experience of Colombia and Peru, for example, is that in the end, the increase of global interest rates is not directly linked to the monetary policy locally, okay? That is only linked if you have, as a result of higher global rates, a strong depreciation, and a strong depreciation results in higher inflation expectations, you know? So it's the second or third derivative of the problem. So in the end, I would say that the reaction function of the central bank in Colombia continues to be one of economic growth, inflation expectations, and maybe the current account deficit. You know, as I mentioned, this year, particular year, the fiscal situation, but is in the end what the higher interest rates abroad means for inflation is the final answer that I have. So is not a straightforward reaction function depending on what happened in interest rates abroad. There is a question about what parameters can trigger a pessimistic scenario on the fiscal situation. We are close to a very negative fiscal scenario, and what is the likelihood that we granted to that? We are already in a very tough fiscal scenario. I was saying to other clients last week that we are in the plan B of the fiscal adjustment. You know, the A plan was the initial bill. Now we are in the plan B, and we don't have plan C. So someone asked me, okay, what happened if Colombia is not able to approve the reform that they are building right now? I don't have any answer to that. The only thing that we can do is try to get more debt, to strongly decrease public spending, but that is not an option in my view during the pandemic. And of course, we start a very negative, vicious circle, in terms of what can happen in terms of funding costs and outflows from Colombia, etc. So I don't think that we are very close to one, but Colombia has to do something very quickly after the pandemic. As I mentioned before in the slide on fiscal accounts, we estimate, and we know that the government too estimate, that we need an adjustment of roughly 2 to 2.5% of GDP in the upcoming years to make debt sustainable in this country. So that we are closer to a pessimistic scenario, yes, we are closer. But if we are able to approve a reform in the upcoming months, we will continue to buy time. So that scenario will be postponed at least 2 years. That is the answer. So, of course, the worst case scenario is not having any reform this year. But I think the likelihood is relatively low at this time. But of course, it's a possible scenario. I think that depending on what happened in terms of economic growth in the upcoming years, the scenario can be worse in 2023, 2024. And at that time, my sense is that Colombia will need to approve the same reform that Carrasquilla initially presented. That is the reform, in my view, that the country needs structurally. Of course, some items, some proposals can be studied and changed and modified and improved. But that reform was a structural reform and the kind of reform that Colombia needs. So what I think at this time is that if we approve the reform in July, August, we are buying time, but we need an additional tax reform ahead, and that reform have to be structural. And if we don't do that in a couple of years from now, I think we will be in problems. Especially because even the government has estimated that the threshold for public debt that makes debt sustainable over time is 60% of GDP. And we are right now at 64%. And we are estimating that next year, debt will be close to 67% of GDP. I feel that if we reach 70% of GDP, it's like a no return point. It's very complex. I think nobody knows a country that reaches a level of 70% of GDP and was successful at lowering it to 40 or 30 without making default, right? I think that we are buying time. The likelihood, I would say, short term would be 30%. 30 is not low, but is not very high. 30% of a very negative scenario. But everything will depend of what happened in the upcoming years in order for that scenario to be able to be avoided after 2023, 2024. I think that the next government will have a very complex task to carry out the reform that we decided as a society to postpone this year. Gracias, María Claudia, por la pregunta. Okay, thank you very much for your time. I hope this was useful for you. Thank you for connecting. Thank you for be with me during more than 1.5 hours. And I hope to see you in the upcoming weeks with another event, maybe talking about the region overall and to analyze what is happening in political terms and the economy in our economies as well. Thank you very much. Thank you for your for being here. Thank you. Bye-bye.